sort of wrap with a learning of another company that you're short in the last 24 hours or so, which is Grubhub.
Yeah.
Which you were kind of outed.
Yeah, Grant's wrote it up last night.
On that one. Why short that name?
So we believe that this pressure is occurring at both ends of the spectrum for the delivery companies. Not only are we seeing pressure on the labor side of the California law, but we believe that the labor arbitrage, we're calling these guys contractors, works in a lot of insidious ways. And I mentioned to the folks at Grants, one of the things that nobody's talking about, for example, but we started noticing on some of the websites, the blog posts that drivers post, is that a lot of them are getting notices from the IRS saying, you haven't been filing your Social Security Medicare tax and you owe 15.3%. Now, regular employees we pay 7.65 if we're employed by someone.
The employer pays half, you
pay half, exactly. Right. But if you're an independent contractor, you owe 15.3% on the first dollar. It's not progressive.
And they're not holding that money aside.
Well, and most of these drivers don't have a federal tax liability at all, right? But they owe that. And a lot of them don't realize it. That works out to $2 an hour that basically is being arbed by the Grubhubs and Ubers and Lyfts. The other problem is that we're getting pressure on the top side in that take rates are coming down as restaurants increasingly play the delivery companies off on each other. And look, the restaurant business is a tough business. And as I mentioned in the piece that was posted last night, even if this works and all four of the delivery companies grow to 20 or 25% of all meals, you are growing into a no-growth business. You're growing into the restaurant business, right? And right now, Grubhub is making almost no money per order, something like 15 cents an order. I mean, there's just no margin in this business. And you're basically putting two more hands outstretched, to the restaurant guy saying, pay the delivery company, pay the driver for money that they're really not making.
And they won't be as aggressive as Uber because they don't have the financial wherewithal.
Well, a friend of mine called it, the Grubhub is locked in a cage with a psychopath with an axe. And I thought that was a good way to put it.
Uber Eats?
Yeah, exactly.
Well, you sort of speak to that there is a movement, both legal and otherwise, to change the way that these drivers, whether it's Uber and Lyft or Grubhub, are classified as independent contractors or actual employees. There's some say real business risk around that.
Well, so we looked at the numbers, and the big urban areas like New York, Chicago, San Francisco, we calculate that most of these drivers are gross, making somewhere around $12, $13 an hour. The cost of a car is, if you lease it, is about $2 an hour if you work it out. It's about $350 a month. Gas and other variable costs work out also to about that per month, about $2 an hour. You then lay in the 15.3% Medicare Social Security tax, that's another $2 an hour. So these drivers, they don't realize it, but they're making, outside of New York and the biggest cities, they're making $6, $7, $8 an hour, that's it. And many of them could be making more money preparing the food than delivering it. Now I know there's lifestyle choices, they can work when they want, but at the very end, this is a labor arbitrage.
So can I make the assumption then that while we're talking about Grubhub, you're short and have the same positions in Uber and Lyft?
We're not disclosing any other positions today. Let's just say I'm not positively disposed to any of those that have food delivery businesses. I'll leave it at that.
Because, okay, we'll take that for what it's worth, because there are obviously similar issues, Joe, that have been discussed in the past. You were long Uber.
I was. I think one of the questions, Jim, that has always been raised is the absence of competition, and I just wonder if the economics that you're mentioning here today is one of the reasons why the competitors have seemed to leave and left behind just basically Uber and Lyft.
Well, again, I make a distinction between ride sharing and food delivery, because food delivery is the opposite. Grubhub's market share has declined as Postmates and DoorDash and Uber Eats have risen. So they owned this business. They owned it first through, as any New Yorker knows, Seamless, which is a different business, by the way.
Right.
And that's one of the risks, because increasingly, as they've expanded nationally, they now employ these fleets of independent contractor drivers. In New York, every restaurant has its own delivery guys, right? So it was just shooting an order to them, which was a decent business. But actually running these big fleets of logistics is a much lower margin business, and there is competition, and the restaurants are pitting each other, And ultimately, the restaurants themselves will figure out delivery if it becomes a bigger part of the business, and we'll go back to the referral business without the necessary need for the logistics. Again, it's going to be profitless prosperity for everybody in the delivery business.
Leave us with a final thought. Someone who's known as this famed short seller, but in reality, through your hedge fund, you're net long, I think, the market, right? Because
our
your hedge fund.
Our hedge fund is, yeah.
Right?
Yeah.
So it's not like you're everything you got is betting against this whole thing. But how do you see where we are in the position that you're in, the chance of more volatility, a Fed that's re-engaged and perhaps going to be even more engaged? You lead up to the presidential election, whereas Lee Cooperman thinks, someone like Elizabeth Warren could be very upsetting to the stock market. How do you see it?
Although I'm old enough to remember when the election of Barack Obama was going to be the worst thing that was going to ever happen to equities, and as my friend Josh Brown has pointed out, things did okay after that. In fact, stock markets tend to do okay under Democratic administrations, the last I checked. Look, I think that trying to predict the market is something we're starting our 35th year in another week. And the one
Congrats
thing,
on that.
The one thing, thanks. The one thing but it was as a short seller, so it's, it's a bit of a mixed blessing. But one thing I've learned.
Well, the last 10.
One thing I've learned is the one thing I'm really not good at is figuring out where the stock market's going to go. Individual companies, we're okay, but the market, I have no idea.
But I'm certain, have some sort of sense whether you think there are going to be more opportunities given what you do if the volatility picks up and you think there's certain
business models. Certainly we're involved in lots of companies. You mentioned Grubhub, where they are TAM stories or where they are seen as network effect stories, but in the face of Grubhub, it's a body shop, right? WeWork, if it would have come public, or if is coming public, is a landlord. It's not a TAM story.
You would have been short that name? Are you thinking about it in those terms?
I can't short it. It's not public yet, but we're familiar with the registration statement.
It might have taken that opportunity away from you.
You're good.
Yeah. So, but I'm just saying, there's lots of business models that this 10-year bull market has brought forth that are kind of questionable.